Hi everyone, my name is Aziz. I'm a real estate professional here in Toronto, and today we're going to be talking about pre-construction, especially condo pre-construction. Very popular right now in the last 5 to 7 years. Why are they important, and what is driving the price up? First of all, let's start from why. Why is pre-construction, condo pre-construction getting popular? The first number one, the most common answer I can give you is there's not enough space for us here in the GTA area to build, normal family homes, detached homes. It's very difficult, and this is partly due to the legislation that was passed in 2005, which is the Greenbelt Legislation. This stopped building from certain part of the GTA, especially the coast area. You can't build towards north, you can only build towards the south, and that alone drives the price and the adoption of condo pre-construction up a lot. So on top of the fact that we don't have enough space to build properties based on the Greenbelt legislation that was passed in 2005, as I said earlier, the demand is going down, and then we have the supply going up thanks to the immigration. Canada is one of the top countries in the world that bring a lot of immigrants into their country. I mean, in 2021, during pandemic, we broke our own record. We brought in over 400,000 people into Canada. Almost 49% of these people that came in 2021, they came to Ontario, and about 70% of these 49%, they'll be living in the GTA and Toronto area. So definitely we need to build. We have this demand right here, and the supply is going down. So, and that's why pre-construction condo is, popping up everywhere and trying to fill the gap of this number of people coming in, providing accommodation for them, providing, where they're going to be living. So these are the things, the immigration, the law that was passed. These are the things that is increasing the value of condo property and increasing the number of pre-construction property coming up. Now, if you know that this is why condo pre-construction are very popular and why it drives the price up, what do you need to do? What do you need to watch out for when you want to get into any condo pre-construction? I'm going to put all the points I want to explain to you today into 4. So the number 1 is something I'm sure you must have known: location. Location is one of the most important things that drives the value, the price of any property, not only condo, any property up. Even there was a study done by Harvard which confirmed this. You look into places like London, Paris, Singapore. What drive the prices of either the condo property or even family homes up is transit. What is the location? How far is this property from transit, from popular grocery stores? People want their homes to not be too far from grocery stores. And also schools. When families move into a location, they want to know how easy is it going to be for them to get their kids into school. Is it very close to good schools? And those are the things that make location of a property very, very important. There are other things as well that also make location important. How are the is there a lot of employer in that location? Are people going there because of work? Is there a lot of company setting up there? Although sometimes companies might want to pull back to see how the area is developing before they can put their office or their branch into that area. So the location of any property, especially pre-construction property, is very important. Sometimes you might not be able to know what is going to happen in the next 5, 4, because most of the construction condo anyways, they have been built in 2 to 3 or 4 years. So you might not know what's going to happen in the next 4 years, and that's why you need to speak to a reliable, intelligent real estate agent. They probably be able to give you advice on what is going to happen based on what is on the official plan of the government. What are they planning to build there? Are they planning to bring a very big mall into that area in the next 4 or 5 years? And that definitely is going to help the location of that property to increase in value. The second one is the builder, and I put this at the second one because they are the one that will build the property that you're planning to buy. You need to know the reputation of the builders. There are a lot of builders in Toronto, especially in GTA areas. A lot of them. Only I would say there are a few of them that are not really reputable, or they are new. And there's nothing bad in new builders, because they're just starting out. But at least when you know that the builder you're dealing with, it's new, you're gonna have that at the back of your mind that anything could happen. Probably maybe they entice you because of the price, and they're new doesn't mean they're not going to grow, but at least you know at that point. But it's advisable to go with builders that have a lot of strong reputation, because that means they're not going to cancel. They're not going to just tell you in 2 to 3 years and say, hey, the price of the items, the equipment we need to build the property has increased, and then you need to pay more, or we're going to cancel, right? So that's why the reputation of the builder is very, very, very important. So, and there's various ways how you can know the reputation of the builder. Go to their website, look at the project they finished. How long does it take those projects for them to finish? If you can go online as well. Just type the name of the builder and maybe type 2 or 3 of the project they've done. You will see people's comment, people's review about what they did. People that bought that project when they built it, they will tell you if it's good or bad. If you're beginning to see a lot of negative comment about the project they built, that will give you that sense of, okay, this builder is reputable or not. There are a lot of builders that have been in the industry for a long time as well, but still don't have the best reputation. So that's where you need to do your own due diligence in choosing the builder. Sometimes real estate professionals like myself will bring a project to you. Sometimes we would have done the due diligence for you to make sure we are bringing projects that are being done by reputable builders. However, you should still do your own due diligence. That will help you to know where you're putting your money into. The next thing is still attached to the builders. What is the incentive that they're planning to give you with this property? So there are a lot of incentives you should look for, but I think the ones that are very, very important is the right to assign. And what does right to assign mean? It means, okay, let's say for example something happens. The property said they're going to finish in 3 years. You got into the property with the mindset of, okay, you're gonna buy the property, but unfortunately you couldn't close because of anything could happen. It could be because something happened financially, you have to back out or anything. That's why you couldn't close, right? So you should be able to have the right to assign that property, which means to flip the paper, to give the paper you have that says, hey, you got this unit, to be able to sell it to someone else. Make sure that builder have that incentive in whatever they're going to be selling you. The other incentive I want you to watch us for is the right to lease during occupancy. So what is occupancy? This is the period when the builders have said, hey, we've completed this property, it has gone through safety, the safety features have checked the property, it's safe to live there, but they still have a few things to finish, like some common area element, like maybe they've not finished the pool, the gym is not done yet, so they're not. The building is not 100% completed, but it's completed to the extent that you can live there. So you should have the right to lease, especially if you're an investor. So what I mean by that is this: for example, you buy this property to invest as an investment purposes. So that means you want someone to be living there between that occupancy to the registration, because this might take probably 4 to 6 months from the occupancy to the registration, and you will be paying some charges. You'll be paying some charges on top while you are not even living in the property yet, because the builder will charge you that okay, you can occupy the property, but it's not yours yet. They've not given you the title, they've not given you the paper that say, hey, Mr. John, this is your property now. You understand? So you should have that right to be able to lease within that period from occupancy to registration. That's very important. In that way, you're going to protect yourself as an investor to still be making money on the property even within that period of occupancy to registration. Another one I want to talk about again is the development charges. Try to make sure it's capped. What does that mean? So development charges, most of the time it's being put on the buyer, because this is the charges that the government put on the developer, and the developer have to put it on you, the buyer or the investor. So you should be able to negotiate with the builder that, hey, I want it to be capped. So let's say, for example, they will have an idea of how much it's going to be when they complete the property. They might not have the actual figure, but they have a range. So let's say, for example, they say development charges is going to be $20,000. So they need to cap it. You understand? So If now the development charges now is above $20,000 after the 3 years of when they complete the property, you're not going to pay more than $20,000. If it's less than $20,000, you pay the exact amount that it is. So in that way, you can protect yourself, because imagine if you don't put that condition there that you want it capped, and mentally you think it's going to be $20,000. And after 3 years, it's $25,000. You have to pay that $25,000 because you don't have that in the agreement saying it's been capped. So make sure that is included as well in the contract. In that way, you're going to protect yourself as an investor. You're going to protect yourself as an individual planning to live in this unit, not to pay extra amount of money that you didn't plan for, because you never know at that time. You might only have planned for the $20,000, and that $5,000 might throw you off a little bit. So the last point I'm going to like to mention when you're getting into pre-construction, especially condo pre-construction, is the HST. HST is the fee that is being charged by the government. This is not from the builder at all. Most of the time, it's around $24,000. But there's a good thing to that. If you're planning to rent that out as an investor, you can get some part of that money out. And how will you do it? You need to pay the $24,000 first. Then within that time, you know the property is about to close. Try to find someone that will, that will rent your property, especially for at least a year, long-term renting. Take that long-term contract, give it to the government. After you pay $24,000, they will refund some of the money to you. And most of the time it's between 90 to 92% of the money. So let's say you pay $24,000, there's a higher chance you can get something between $23,000 to maybe $23,300 even. So that amount is what you should be looking to get back. So in a nutshell, you're going to be paying probably $700 or $600 or maybe maximum. No, don't let me use the word maximum. Let's say $1,000 you're going to pay for the HST. So depending on what the government feel like your property worth or what is surrounding the property, because it's from property to property. Some property they're going to get back 23,300, some will get back 23,000, some will even get 22,000 something. You understand? But at least within that range, you know you're getting something back. So that cost alone always surprise a lot of people, and that's why when you are dealing with any real estate agent that is helping you to get into any pre-construction, ask them what are the money, the fees you should be looking for when you're about to close. In that way, you can prepare yourself mentally, because sometimes if you don't ask, they might not tell you. Probably they forgot. I would expect they should be able to tell you, but at least you know now that you should ask that question. It's like, okay, what about the HST? So you have that mind at back of your mind, $24,000. You're going to get back about $23,000 when you rent it out, especially long-term rentals, like a year. So this takes us to the end of today's discussion around pre-construction. Why is it popular? Why is it important? What are the things you should look out for? If you like this video, kindly subscribe to my channel, click the like button, comment, so that I can be able to provide more of this video for you guys. Thank you so much for watching. Have a wonderful day.